Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives after they put out important news. With us today for the first time ever, Daniel Petrov. He's CEO at Kiaro Holdings, trades on TSX Venture Exchange under the stock symbol KO. For those new to the story, and that's going to be a lot of you because it's our first interview, Kiaro is an omni-channel cannabis retailer and distributor. What does that mean? They've got existing storefronts across British Columbia, Saskatchewan, Ontario, wholesale distribution in Saskatchewan, and e-commerce sites in Canada, the US, and Australia. More than just lip service, $17.1 million in revenues for the last fiscal year, up 230%, with a gross profit of $5.1 million. That was up 280%. More than just an outlier, that continued in Q1 recently with revenue of $5.2 million, up 94%, and gross profit of $1.56 million, up 118%. The company's hitting on all cylinders. They got a major acquisition to talk about. Daniel, welcome to the show.
Thanks, George. Thanks for having me.
Hey, great to have you guys on. You're a fantastic company. And if we were just going to talk about what Kiaro was up until today's press release, that would be a lot to talk about. But the press release we're going to talk about is Kiaro acquires Hemisphere, Canada to become a prominent national cannabis retailer with forecasted annual revenues of $42.7 million. This is a big acquisition. Before we get into it, let's understand Kiaro. Talk to us about the business and why you guys are so successful and the number of the locations that you've got.
Yeah, let's talk about Kiaro. So before we talk about the acquisition and kind of how we got here, Kiaro's a retail cannabis company. We started in 2018, early 2018. My background is originally one of the co-founders of Aurora Cannabis, a producer in the cannabis space.
Wow.
And when legalization opened up, I spun out of Aurora with the support of the team there, and I founded Kiaro to tackle really the recreational retail opportunity in cannabis. So who is Kiaro before the acquisition? BC-based, Vancouver-based company, a huge team of huge retail experience experts in Kiaro that helped build the company from day one. Really, we focused on BC as our number one, and I would say Saskatchewan equally as the number two there. And we built out in BC so far, we built out 6 stores in BC and 2 stores in Saskatchewan. The 6th store coming online right now in BC is actually in Kelowna, so we're expecting that to open up here in August. But in really 2 years, because the first year of 2018, that year was really just getting started. But in 2 years, we went from 4 stores to now 8 stores, and now 16 to 18 stores with the new acquisition. So who is Kiaro? Kiaro is a retailer, a pure retail company that we're really obsessed with customer experience and delivering that customer service product experience. And that's really what we focus on. We want to be the service experience like Uber, Airbnb, DoorDash, like Starbucks, and let the producers do their job, and we're going to do our job. So, we have a wholesale business in Saskatchewan as well, one of 2 major wholesalers in Saskatchewan. There's a number of wholesalers I think that plan to be in Saskatchewan, but really it's us and Fire and Flower that really have the wholesale market there. So that's really it. BC, Saskatchewan, out of our competitors, the top 2 up until just a few months ago had 0 stores in BC, even though they had upwards of 30 stores in Ontario. But BC company, BC based, West Coast, and this acquisition that's coming brings all of the East Coast stuff. And I want to talk about the acquisition in detail, but it's just an exciting time for Kiaro as a retailer.
Man, how did you guys get up to, $17.1 million in revenue and profitable, the gross profit of $5.1 million? Generally speaking, how are you guys able to pull that off? Because so many people have tried and they've just fallen flat in their face, and you guys are just kicking it on all cylinders.
I think, what, it's a big part of it is just retail is really retail expertise. So in business, in any business, there's 3 things that usually come up: timing, team, and capital. So, as a private company, we definitely have the timing of the market, new industry. We built a team, a real retail team. So I think this opportunity was early stages. There's still a lot of people that didn't, were scared of getting into cannabis. And what we're able to do is really find those people with the expertise and bring them into the cannabis business and get excited about it. We have Eleanor Lynch, our CEO of operations. She's been in retail for over 20 years. She ran Lids Canada in Jersey City, 153 stores in Canada.
Wow.
We got a CFO, Janet Hoffer, She helped build up Rocky Mountain Chocolates, really huge expertise again in retail. We even have our director of finance, Steve. Steve comes from Sage, and everybody probably knows Sage. So these experiential brands. So what we did when they came in, we did have to teach them the cannabis business, but they knew the retail business. And the challenge is, everyone that got in with this early opportunity, they didn't know the retail business. Most of them, they knew the cannabis business and the opportunity. What you had here is we had the time, we had the team, and really we focused on operational excellence. We focused on building the best stores, and we focused on our timing. Our timing in BC, we got a little fortunate to be founded in BC, but BC was the first mover advantage. Again, the regulatory burden for BC is huge. So if any competitor comes in, it's going to take them 12 months just to get licensed.
Yeah, you guys got an anchor there now. You got a great foothold.
I said on a number of calls, and it's Warren Buffett. He continually says he doesn't really like retail because it's hard to build a moat. But in this regulated sense, we built the moat.
Yeah.
BC has a moat, and that moat is staying. Where if you go over to other provinces that don't have the defensibility, they don't have the barrier to entry, just the regulatory process you have to go through, and the different stakeholders between the province and the municipality, once that bottleneck of applications frees up, it's just open season. So, now we're going there in Ontario, but the key is we had to wait to get to the best stores, because the best stores are going to win that market because it's very competitive. The first stores in BC are going to win this market, which numbers are proving it, like you said, because there's a barrier, there's a moat. We're one of 4 stores in Port Moody, where Port Moody is a city where they said we only want 5 for 2 years, for 2 years. So if you go to Ontario and you go to Toronto, you can put a store beside each other. So there's really no real barrier to entry other than just application processing in Ontario. And when you get there, your differentiator is you better have the best store and the best lease. Because if you don't, we're going to drown you, right?
So let's talk about that. Here's the acquisition of Hemisphere, Hemisphere Cannabis. Where are their locations? They're Ontario based, right? How many locations do they have? How many locations have you guys acquired? Where are they located? And why do you think, given what you just said, this is a great acquisition for you guys?
Yeah. So about the Ontario acquisition, who is Hemisphere? Hemisphere is Aegis Brands. So subsidiary of Aegis Brands. They own the Second Cup and built up the Second Cup franchise. Right. I think most people have seen or know of Second Cup or been to one. They actually recently sold that, but they sold 130 stores. This is a Toronto-based company that has sold 130 stores in the coffee business. They did keep their one coffee asset, which is a company called Bridgemark, which is a coffee company that they're building out, which actually tends to be on more of the experiential Starbucks side than the Second Cup side. But these guys are retail titans. Like you look at the company of Aegis Brands, look at the stock, don't let it fool you, because the guys behind that company are major retail titans. These are guys that help build Yogan Frus. These are guys that are in the U.S. building hundreds and hundreds of stores continually. So just a huge, that's who Hemisphere is. That's who Aegis Brands is. And this is a portfolio they curated to be the best. So if you have guys that are in there that had 130 stores, have all the relationships with the landlords, all the lease rates, negotiating power, right, and all the locations to choose from, and these are the 7 stores they picked, like it's just phenomenal.
Right. Not only that, they're able to go and place great store locations that wouldn't necessarily be available to George Com and other guys.
No, it is what it is. Absolutely, they have those relationships. They have that. So going to a landlord in a warm relationship that you already have, they had their pick of the litter. So not only do we have 7 stores, but we have 2 more. But I'll talk about the 7. These 7s are spread out strategically: 2 in Toronto, 2 in Ottawa, and 2 in between. So these are in major centers. These have anchor tenants. I can't say enough. The one that's just opening this week is on Front Street in Toronto. So just a beautiful footprint of stores. So going in to this deal, it gives Kiaro just a super solid base to start from. If you want to try to pick up 1 and pick up 2, it's tough, right? To get those synergies, to get an operating team on the ground. Like this just gives us that big foundation of prime stores. Like these are A stores, right?
And they're really succeeding, right? Because the headline says together with the acquisition, you're going to become a prominent national retailer with forecast annual revenues of 42.7 million. So if you guys did 17 million last year, is it safe to assume those stores do about 25 million, give or take, to the ballpark?
Well, if you look at it, what we're not including in there, which we are, but not show. Cozy Cannabis is a deal that didn't get a lot of attention, right? It's a beautiful deal. It's another store in Toronto. So that acquisition actually wasn't primary just for the store. It was for the 3 e-com stores that the owner founded and built and ran. So we got vape.com, we got vape.ca, and we got Australia Vaporizer Direct in Australia. So we got US, we got Canada, and now we got Australia, all 3. So if you look at all the combined revenues, it's not just, the 7 stores from Aegis, it's the 8th store that we have, the other one in Toronto from Cozy Cannabis, and the 8 stores that we're going to have from Saskatchewan and BC, right? So you're going to have a 16 store pack. And I'm not sure, I got to check the numbers, but I mean, I don't even know if we included the next 2 stores that Aegis has on. So there's 2 stores, 2 leases that actually come on that can be operationalized by the end of the year. So that's where you get to 18 stores, right? So yeah, it's just extreme growth. And let's just say this, it doubles our footprint, doubles our revenues, and we didn't pay 50% of the company for it. So if you just do the math, I mean, this is an accretive deal. I don't know how many times you can arbitrage by just buying the stock.
What does it mean for the company strategically now to be coast to coast? You've gone from being really BC focused and Western Canada. Now you're over here on this side of the country. Strategically, does that create even better buying opportunities for products, relationships? What does it do for you guys? And I'm going to assume also, Dan, that when you go to negotiate or find other locations and you go talk to me, the landlord of George Calm Real Estate, you can say, hey, we've got 16, 18 locations. We want the pick of your litter, correct? Strategically, this makes you a powerful company.
I mean, yeah, let's talk about the strategic benefits, because there's a lot of benefits out of this deal that are intangibles, call them, and they don't, they're not just the math on the books here. So what is it? A little bit more about the Hemisphere deal, just to give you an idea. Whenever you're acquiring a company, we're doubling our footprint. You'd expect there to be, man, you're going to have to trim some stuff. There's going to be some synergies that you're going to have to synergize out or something. There's going to be some integration, a lot of integration costs. There's going to be a management team on the other side. These guys prepared this portfolio and they ran the management from Aegis Brands. So the team ran the management from Aegis Brands. So really what we're getting here, just to be clear, are 7 stores with an operating package that really complements our team. The only real senior manager that's coming over is a VP of retail, and Jen Juby, and she's phenomenal. 20 years in retail, 16 years at Starbucks, and just I think about a year now experience in getting that education in cannabis and that experience. And if anyone does valuations, 50% of the wage of someone can be attributed after 6 months because they built that competency. But so we're getting that. We're getting a really lean package that really just bolts on to Kiaro and not just expands, the footprint and the stores and the revenues. It expands the team. We have an operating team now in a senior leader, Jen Juby, in Ontario, in Toronto, to complement our portfolio. So when you're looking at these style acquisitions, it's not just about the assets. It's about what are the intangibles? What are the benefits? Well, we're acquiring the stores, hands down. We're acquiring those revenues. Yes, we're acquiring a senior leader that does retail. We're acquiring a Toronto-based team and a Toronto-based, even board member. Steve Pelton, the CEO of Aegis, is coming on the board. So you can quickly look how we became a West Coast company to a mind and management Canadian company. And I think that's the benefits that are just huge when you do an M&A. So, I think I might have missed something there. But
Dan, do you guys think M&A is going to be your number one driver of growth? Because you did acquire Cozy Cannabis. You have acquired Hemisphere here. Will you continue to grow by M&A primarily, or is organic part of your strategy as well?
Yeah, that's a great question. So I don't do a lot of interviews, but I'm starting now. So if you look back at some of the interviews I did, maybe I got to be more poignant on these points. Is I'm really have framed up what we're going to be doing. So I remember I did a conference. I think it was Canaccord back not too long ago, and I said, hey, people were like, well, what's your growth? Are you guys getting in Ontario? I said, yeah, we're getting in Ontario. You guys got to just sold off. We're getting in, but we're doing it right. So I said, hey, I'm not giving guidance here, but if you look at our trend, we went from 4 stores 1 year to 8 stores. We doubled, you can just trend it out, and maybe we're going to double. So what do? We said what we were going to do, and we did it. We delivered on it. So what is the growth now? Yes, there's going to be organic. We're not going to rule out organic. We found amazing stores organically. Even the one, it was an acquisition, but it was a lease and license in Kelowna that we acquired the lease and the license opportunity. Organic would have been very tough, in my opinion, in Ontario, especially when you're moving to another region. So after we have this foundation of M&A, we're going to continue M&A to scale up the numbers, because we're definitely not going to let High Tide or Fire and Flower get away with this too far. But after you have that base, how easy is it? We have a management team now in Toronto, in Ontario. How easy is it now to add organic? You actually have a foundation to add to. So absolutely, we're going to do organic, but we're not going to scale up to 100 stores, 200 stores by doing organic. We got to acquire. And fortunately, what came with this deal is a lot of awareness that now we're in the Ontario market, and there's a lot of deal flow coming through now.
So knocking on your door, right? Suddenly,
absolutely,
George Cannabis, who's got 3 stores, is going to call you up and say, "Hey guys, I might be looking for an exit here."
George, I think you did call me up. And offer me a store.
That might have been George Cannabis who called you up, but it wasn't me. That's
yeah.
But that is
too high then.
All kidding aside, that has to be.
It has to be coming. We can get up to 30 right now in Ontario. So this is going to be 9. We just did 9 in one swoop. We have a team that has ample real estate opportunities and has the ability to get the best stores. Like, I don't know anybody that will have a better. People have they might be able to match us with what we have access to now in Ontario, but you show me one person that's going to have better access to better locations. And in Ontario, you're not going to find better. People might be able to find the same, but they're not going to find better. So what are we going to do? We're going to acquire. We're going to get up to 30 in September. They're raising that cap above 30. So you're going to see us quickly get to that 30 number in Ontario.
Is your goal to dominate, to be a dominant Canadian retailer, or do you at some point look to go south of the border, or is that just too big? I mean, if you look
south of the border, absolutely. I mean, yeah, absolutely south of the border. And maybe I'll just stick with just one North Star that we have in the company. We divide the business of cannabis in really to high level. For us, it's simple to look at it in 2 facets, 2 parts. You got someone that produces the product. You got someone that serves customers the product. We're that serving customers product in every facet. So right now, brick and mortar is where we're strong at. That's where we're growing at. That's really the ground game and getting to the customer, getting these stores open, getting positioned. We have e-com. We're doing e-com in Saskatchewan. We probably one of the first companies that launched e-com, because Saskatchewan is the only place you could do it. We're one of the first companies to launch, and we actually acquired, but build out a wholesale business in Saskatchewan. It's doing phenomenally. We hired, I think I told you another, just in conversation. I mean, we hired someone from the Weston family from Loblaws that has been there for 10, 20 years. They used to manage their supply chain.
Really building your retail pedergree stronger than anybody I've seen.
I think we are. And what I like to say, again, timing, team, capital. We're doing things at the right time. We were in BC at the right time. Sure, a little bit maybe luck and fortune that BC had those regulations and we're here. But when we realized that it is the right time, so we furthered that. We're getting into Ontario at the right time. Not even just one more thing to add to what the right time is. Sure. 2 of our main top competitors hit the 30 cap. So we just took buyers out of the market, right? So who steps up? I mean, if those guys. Explain
to everyone what the 30 cap is, by the way, so people know what.
Yeah, it's good point. So in Ontario, they have 30 store cap, 30 store limit right now. Can't see my hand, but they have a 30 store limit.
I can see it.
So they have a 30 store limit. In BC, we have 8 stores. So you have a cap on 8 stores. So some of the provinces have come out with these caps. Ontario is 30, so we can get up to 30 stores. Before we even did this acquisition, we waited, we watched, and we've been in the market since the lottery. So we've been in the market since the beginning, watching and waiting and exploring, and just waiting for the right time. And when we saw deals coming through, our business development team has looked through hundreds of deals in Ontario. I think they know the market better than companies based on. So they looked at hundreds of deals, and again, Hemisphere is the one that came up to the top. But when we looked, we're also watching our competitors, how they're acquiring stores, and we saw when High Tide and Fire and Flower hit that 30 cap. Well, okay, now they're out of the market. So supply demand. There's a lot of people getting a lot of supply in stores. There's demand, but as soon as that demand drops, those prices are going to come down, and we can get in there and capitalize. So that's where the 30 cap is. And I think that's how it plays in the market. So when these guys are rushing in,
you're sitting in a great position right now. So you can pick up another 21 stores in Ontario, and you got two of the biggest buyers out now. You're not going to be competing against them.
Absolutely. You have the best retail partners in Aegis Brands. And now we have one of the best portfolios, I'd say best store portfolio actually in Ontario with these locations. And we could just add to that. So now when we're going, we kind of have our pick of the litter in stores. We can add M&A, we can add organically. But yeah, we can get up to that 30 store cap very, very quickly. I'll stop there, but that's what the cap is.
And the last thing I was going to say, the beautiful part is profitability, because after this acquisition and Cozy Cannabis on top of that, you think you're gonna have you'll have a gross margin of just under $14 million. I mean, so you're doing it.
You know what? So, and another thing, timing, right? And when you apply that timing thing to just everything you're doing, right? It's what do? We focus on our timing to build the best business model, right? Best operating business, the best team to run it, those best competencies when it comes to supply chain management, to our retail store experience, to our brand, to our team, to our talent, to everything. So when you look at the timing, just the timing of what we did, we said, hey, we're going to focus on retail operations. And what do? We're the best. We have the top margins in the retail stores of any public market competitor that you can see the data on.
And a lot of that is the fact that your brick and mortar experiences resembles that of an Apple store, right?
The brick and mortar resembles that of an Apple store, and you know what? It's what we selected to go in with. It's when you look at the cannabis opportunity or any opportunity, you can also break it down into exploitation, exploration, right? And I think a lot of companies came in very excited, and they did a lot of exploring and spent some money, and instead of saying, hey, well, wait a second, the first thing to exploit is you have the ability to take the unregulated market into the regulated market. Hey, you have the ability to commoditize the experience where the customer is at. So what does the customer want? Customer, sure, they like a hat, they like the swag. But what do they want? They want the product in stock at the right price when they want it, right? That's what they want. That's the first bar. So that's what we did. We focused on that product mix, that product selection. So when a customer comes in our store, they get exactly what they want, when they want it, how they want it. They know it's in stock, and they know we're at the back end managing what they want to make sure, hey, they don't even know it because it's seamless. When they come in, what they want is on the shelf. And a lot of companies went out of stock and they didn't get the right mix, and they brought a lot of fancy products in that weren't selling. It just wasn't what the customer wanted. What did we make fancy? Our retail experience. From day one, it was tech in the store. I think we were maybe a year after, maybe not even, after McDonald's when they came out with the self-service ordering terminals. Like we came out with those kiosks day one. Our first store had a seamless terminal. So it's like if someone comes in and, hey, just, I'm the person that I just want to, when I need your help, I'll get you. But, don't bug me. Someone can come in the store and just use the terminal, make an order. We have an order screen that shows when your order is being prepared and when it's ready. So you can browse around the store. You should. And this is day one, right? So day one, we did this because, my background being in tech and computer science is like, that's where I live. And if I'm going to do a business, that's where the business is going to have. We're going to have infused tech because that, any company nowadays, tech better be some of your strategy. So that's, I think, part of the game is just, again, obsessed with customers. What do they want now? Where are they? And using that data as they're ordering, as they're coming in, all that numbers to really just have our experience mold and cater to them. We're serving them. So just obsessed with that. Product mix was number one.
You sound like Steve Jobs, you know that, right? You sound like Steve Jobs. I'm not kidding you.
I got to watch some videos.
Customer obsession is everything.
Oh, it is. I mean, what are you trying to do in a retail environment other than make a living environment that really just reacts to the customer and gives them what they want? I mean, that's really what it is. The customer, our teacher, the customer's who is driving us. We're not driving them. I mean, Steve Jobs, again, we do have, sometimes the customer doesn't know what they want because it hasn't been created yet, but we're going to do that. We're going to do that too. And maybe we'll have some time to talk on this call, but I kind of got lost. I'll say, George, give it back to you because it's just an exciting time. I mean, I don't think this deal Hemisphere puts us into top 4 spots, I believe, for store count, corporately owned stores. And that's Fire and Flower, that's High Tide. And I believe it's YSS who was bought by Alcana. But everyone else is now a little bit below us, and this is just the beginning, right?
Yeah,
this is just
you still got runway. You still got a lot of runway in front of you, especially in Ontario.
We got, and you know what? Little lesser discussed is most cannabis companies have debt. They're sitting on a debt leverage of about 40 to 60%. So we have 800,000 in debt. We have negligible debt. So our ability to still run just by balancing out our debt leverage, like without raising money and where market cap is, I wish I could buy more without early warning. I'll just tell you that, because it's amazing where we're at with this company. And now we gotta communicate to the audience. We gotta tell people where we're at, tell the investor community. But it's just an exciting time right now.
And what really comes, and this is what I love about this format, Daniel, is that there's the press release and the numbers, but then there's really picking up on the passion and the energy of the CEO, which I have to assume, and everyone at home watching it has to assume, reflects of the entire organization over Kiaro. And I'm telling you, if there's one thing that's come through, man, it's how energetic, passionate, but at the same time, really precision professional you guys are with this retail group, retail focused, smart acquisition, your timing, man. Thanks for joining us. I'm going to leave last word to you for what your shareholders, should be looking for in the next for the rest of 2021.
Rest of 2021, you're gonna see this whole footprint come to life. You're gonna see us as a Canadian retailer. You're gonna see our digital. We're gonna focus on this year. BC just opened up last mile delivery. We have competencies. We do last mile delivery in Saskatchewan. So you're gonna see us really operationalize our brick and mortar. We're gonna be targeting the same metrics, the same sales. I want to say same store sales because they're new. But we're going to be targeting those sales, same store sales. We're going to be focusing on digital with these e-com stores we have. We're going to be making inroads into the US and Australia so we can sell through those channels, build those relationships, and really we're going to catch up to our competitors with a better model and better stores. So yeah, we stayed a little behind in certain aspects, but you're going to see us catch up real quick with a way better experience, a way better product, a way better footprint. And we're going to make these inroads, which we already have in the US. So you're going to see a huge digital component this year. And I'll just say one thing as to some other plans we have on the innovation and the exploration side, because we're not just going to be a brick and mortar retail company. We're going to be a retail company very soon. And that means we're going to have to do innovation, because we're not just going to be the Blockbuster. We're going to be the Netflix. So when you look at that, there's some relationships and some deals that we're doing. There's some deals we're doing where you're going to see innovative retail applications in their right time. So you know what? Nowadays it's not just brick and mortar. It's brick and mortar. It's e-commerce, last mile delivery, and just for a little hint, there's also vending if that ever comes into play. So there's applications that are coming in the retail sphere in general that are really cool, really disruptive. And why can't we have them in cannabis day one? Or why can't we do that? So I guess I'll just leave it with that. But it's just an exciting time to be at Kiaro. I'll just say that, and in Canada for cannabis.
I'll tell you this much: a lot of people would have been happy with your pre-acquisition numbers and profile, 17.1 million revenue, profitable. Even more people would have been happy with your post-acquisition profile of both Cozy and Hemisphere being at 43 million revenue, 13 million-ish in gross, 14 million in gross. But here you are talking about like that's past history already. You're not celebrating. You're moving forward. Can't wait to see what you guys do in the next 6 weeks, 6 months. And in 2022, Dan, great having you on, and thanks for joining us.
Absolutely, George. Thanks, George. Thanks.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Daniel Petrov, he's CEO of Kiaro Holdings, trades at the TSX Venture Exchange on the stock symbol KO. Listen, you heard or you watched the numbers pre-acquisition. You heard about the numbers after these two acquisitions. And now you've heard Dan talk about where they're going in Ontario and in other places. So you've got to do your due diligence. That part we can't do for you. Best way to do that is first start at Agoracom, go to the Kiaro profile page. We give you a good 10,000 foot overview of the company, neatly summarize all the different parts of it so you have a good understanding. And then from there, or as you can see right above Daniel, Kiaro.com to do your deeper dive due diligence. You know where cannabis is going. It's only going to continue to grow. And what you've got to decide is how big of a role Kiaro will play in that industry growth. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and then leaving a comment below.
And then don't forget to help yourself by subscribing to our channel so you don't ever miss another great Agoracom small cap video.